Hey, lots of stocks. Let's try and understand what's going to actually lead to the recovery today. And Samit is here to flag off some of the stocks which are going to be in focus and back of some of the brokerage notes which are coming in. And two stocks that he's going to flag off, Bajaj Finance as well as Avenue Supermarts. But let's start with the big one, Bajaj Finance first. What does Bank of America have to say?
Well, the major reason why they are bullish on Bajaj Finance is the fact that the stock has corrected nearly 19% from its 52-week high, and this was owing to the valuation derating on the back of the regulatory restrictions that we had seen coming in from RBI, not only for Bajaj Finance but also for other NBFCs. Now, post the fall, if you look at the valuations of Bajaj Finance, they're at a discount of nearly 29% compared to its 5-year average. However, on the other hand, if you see the cut in FY25 and FY26 earnings because of this regulatory action is just 1%. Now, this clearly shows that whatever regulatory actions currently RBI has taken would have a minimal impact on the company's earnings potential. But despite that, we have seen such kind of a sharp fall when it comes to Bajaj Finance share prices. Now, even in one of its recent analyst meet, Bajaj Finance was very confident of growing its loan book at around 26 to 28%, and they also believe that their asset quality is pretty much stable and credit cost will also remain within the guided range that they had given this. Thus, BofA now believes that the valuation derating for Bajaj Finance is overdone, and there are multiple positive near-term triggers for Bajaj Finance, like relaxation of the RBI restriction on its digital products. Along with this, improving liquidity that they are seeing in the system, which also bodes well for the company's margin stability. And also, if there is a rate cut that happens in the second half of this calendar year, that will also be positive for Bajaj Finance going forward. And valuations are at a discount of nearly 29%. Buy rating with a target price of 9,175, which suggests a return potential of nearly 38% on a Nifty stock right now.
Kunal, just come in with your take. Given this report talking about targets of about 9,000, what are the technicals looking like?
Well, I believe that the stock is still going through a building block in terms of recovery, because it's still from I think 8,500, 600 levels, it had fallen down to 6,200 mark. There was a point where the stock was almost 1,000 points away from its 200 moving average. So I think 7,200 was the 200 DMA. The stock had almost been fallen down 1,000 points from those levels. So it's now into a recovery phase. So far, I would call it recovery for the stock because the volumes are a miss. So because we typically look out for strong volume patterns for Bajaj Finance, and when the stock bottoms out, and if that happens, then we see a much more speedy recovery. So I'd probably take it step by step. Maybe 7,000 could be an immediate target for the stock price, and once that's taken out, I think we should be looking at targets higher.
All right, that's a 6-month chart, down 11% for Bajaj Finance. Kunal says watch out for 7,000 first up on the charts. Let's move on then, and it's Avenue Supermarts as well in the spotlight, and CLSA is talking about a pretty strong addressable market as well.
Well, after a very long time, we have seen one initiate note coming in for Avenue Supermarts, and CLSA has come out with this note with a buy rating and a target price of 5,107. Now, the most important point of the CLSA note was the total addressable market of the urban food and grocery market stands at close to more than $500 billion US, and less than 5% of this is just organized, which shows the kind of market opportunity that is there for DMart going forward. Now, they also say that DMart is one of the lowest cost retailer, not only in India but also globally. They are operating on an everyday low cost, everyday low price model, and they have successfully done it. And that's one of the key competitive advantage which has led to market share gains for DMart, and which will also benefit the company even going forward as per the brokerage. Now, they're also saying along with this is a steady increase in DMart's private label offering, and they believe that private labels can be a key differentiator for DMart because they are not only cheaper when compared to the mainline products, but also they are high margin products for the company, and that could be the key differentiator going forward. Along with this, they're also expecting over longish period, like over the next 10 years, they're expecting DMart number of stores to grow nearly 3 times from the current number of stores of 341. And one interesting point that they made in this report was that if DMart reaches a similar store population density as Walmart, which has nearly 1 store per 1 lakh people in the US, and that could mean that DMart could have nearly 7,000 stores across India in the next 25 years. So this shows clearly that the growth opportunity or the potential for DMart is very high in India, given that the organized market is very less at just 5%.